Hey everyone, John Henry here from School of Trade, and today we're going to be talking about trading with Bollinger Bands. So Bollinger Bands have been around for quite a while. They're invented by a guy named John Bollinger, and essentially they're used to identify price volatility, and they do that by using a standard deviation around a simple moving average. So typically the Bollinger Bands use, a 20-period moving average and then a 2 deviation on the top and a 2 deviation on the bottom, and that's what they're using to project the resistance above and the support below. Now, there's a lot of different ways that you can use these Bollinger Bands in order to take trades and find places in high percentage areas that we can look to hop in and out of trades. The first one is using them for a breakout. And essentially what you're doing then is you're looking for these bands to narrow. So as an example, right here, you can see how these bands pinch together really quick right here and then immediately expand right back out again. When you see these arrows pinch together, basically what that's telling you is price is consolidating. And the tighter and tighter price is consolidating, think of it like a coiled spring, right? The tighter and tighter and tighter you push that spring, eventually that spring is going to explode to one of the sides. So it's a big heads up when you see these Bollinger Bands pinch together like this. Essentially, a breakout is imminent. It's going to be coming sooner than later. So that's one of the easiest ways to use these Bollinger Bands. Now, looking at it in that sense, where should I place my profit targets? How should I use this in order to kind of get into a trade? Well, in terms of the breakouts, there's a lot of different ways that you can use them in terms of the profit targets. But usually, when you're looking at getting into these trades for breakouts, your target really is a floating target. You don't have any set area that you're looking to place your target. What you are waiting for, though, is when price closes back in the bands. Now, I believe the Bollinger, and a lot of people have different methodologies to this, but some people wait for the first close, some people wait for the second, some even wait for the third candle to close inside of the cloud. Now, in this case, you could go off the first one, which is more aggressive, but you take your breakout, your entry would be right there, and your target would be right there. Not a huge profit by any means. This is only a 5-minute chart, but you get the idea. Breakouts are always typically a little bit harder to get involved with. Now, the other way to use Bollinger Bands is to use them as support and resistance zones. And looking at these in a sense of when you're coming into the top of the Bollinger Band or when you're coming into the bottom of the Bollinger Band, you want to be looking to buy at the bottom and sell at the top. Now, this makes it a little bit easier to place your profit targets because then your first profit target is going to be the midline right in the middle there, and your second target is going to be right at the highs of the Bollinger Band. So your first target comes off at the mid, second target right off at the highs. And again, because if you see a pinch like we had here and you're expecting a breakout, you could trail that final target and wait for the close inside the cloud again. Now, you don't just want to take these, support and resistance trades off the highs and lows of the Bollinger Band in just any place. Usually the best location is to find an area of support or resistance and wait until the Bollinger meets up with that. So as an example, if you had, a wedge high that was coming through here, and you knew that you wanted to become a seller here, when price came into these highs of the Bollinger Band and the highs of that wedge that we had, that's when you want to be looking to sell. You don't just want to sell because it's a high or buy at the low. But once you get into that position, again, first target right off of the mid, second target right off at the bottom. Now, the next thing that you need to concern yourself with when trading these is where to place your stop loss. And the stop loss, the best place to put it is going to be 3 ticks below the low of the entry bar that you use to get into the trade. That's going to achieve essentially a low-risk trade with a high reward because you're using the entry chart for a stop loss and the anchor chart for the profit targets. So keep that in mind when you're using these in terms of trading them as support and resistance. But they're a huge asset to a lot of traders, and they're a very widely used indicator, very, very powerful. So that's going to be trading with Bollinger Bands. If you have any questions about it, feel free to send an email to School of Trade. And don't forget to check out our trial at schooloftrade.com. Have a good one. Bye.